Welcome back to another Spaces session here on Avalanche. Super excited. We got the GMX squad in here today to talk about V2 launch on Avalanche. We can kick things off. I'm Kyle, head of social here for Avalanche, and excited to welcome you all in to talk GMX V2 today. So I'm going to let our speakers introduce themselves, and then Luigi, I'll let you take it away. So, Coinflipcanada, you want to give us a quick intro on who you are and what you do, and we'll kick things off from there.
Well, thanks so much. Coinflipcanada. I'm one of the core contributors at GMX. I spend most of my day sort of working on the build out of our ecosystem and working with our key partners. So the most typical example I give is it's working with the people that we've built on top of, which is blockchains like Avalanche, and the partners and integrations that are getting built on top of GMX.
Awesome. Excited to have you here. Thanks for joining us. And lots of great work done so far since the original launch of GMX on Avalanche. Excited to hear more about V2. And then Luigi, you can kind of take it away from here.
Sure. Yeah, so for anybody who doesn't know me, my name is Luigi. I head our DeFi sort of operations here at Avalabs, and also our developer relations most recently. Been here for about 2.5 years, and really enjoy GMX as a product. I've really enjoyed getting to know the team, the product, and really have been looking forward to V2 for a long time. So I think that's the way we should just dive right into this and let the users know, I guess, the main differences between GMX V1 versus V2. V1 has this GLP model, which is sort of like a basket. I like to call it like try crypto in some respects that you can trade perps against. It's a really interesting model, gained a lot of traction, but ended up being like a very large building block across DeFi in terms of an asset that people wanted to build on top of. Now, V2 is a little bit different of a model. So I think Coinflip, maybe that's the place that we want to start. The main differences from your perspective of V1 and V2, and what was the impetus to build, I guess, V2?
Yeah, so in the end, a lot of the thing that I sort of would consider the North Star of what I've seen, GMX, our community, sort of focus on as we sort of think about, what is the problem that we're trying to solve? What is it that we're trying to address? And it's always been linked to this idea of how do you create efficient liquid markets on chain? And GLP was, call it some of our contributors coming together, and our take about 2 years ago, or a little over 2 years ago, even when it was Gambit, on how to do that. And it was leveraging a multi-asset pool that could back all transactions and ensure that liquidity providers were holding the assets that would allow anybody to trade against. It was taking that and combining it with oracles to help with price discovery, so that we didn't need to rely on on-chain arbitrage to assist in that price discovery. And more than anything else, it was a proof that even a limited amount of capital could create a very efficient market potentially if you leverage the right pieces. And we were very lucky, as Luigi mentioned. I mean, GLP has grown considerably in size between the two chains we're present on. It was actually, I don't actually know what it peaked out at, but even now I think we're a little over 500 million of liquidity. And what it did was it started, we started looking at this and seeing how it could be used, as within the ecosystem as a building block, source of yield, source of trading, a venue for hedging, for trading, and then said, well, how do we take this and now create a product that can potentially scale even further? And that's actually where V2 came about. It was saying, how do you now look at when you actually have these markets developing at scale on chain, how can we make bigger, better, big, efficient markets. And so that's where a lot of the tweaks have come in. It involved us working with partners like Chainlink to create a whole new set of oracles that had far more granular data, lower latency, could allow us to be able to better price these markets. And that's on the basis of saying that once you get a lot of capital, you can't simply rely on a single reference price for the market. There is a price for a market at $100,000, at $1 million, and at $10 million. And working to aggregate the best information from across all trading venues for these assets. It was about looking and saying, how can we expand the types of assets that we can support? And that's both currently with the first expansion crypto assets, but over time, non-crypto assets. And then finally, how do we look at what liquidity providers really liked about GLP and further optimize it? It was taking advantage of the benefits of the Oracle system that reduced effectively IL, or the cost of price discovery, but it was also giving liquidity providers more granularity. You get to pick which markets you want to put your liquidity in. You can then thereby focus, and especially for large institutional investors who may not have a desire to have an exposure to a wider basket of assets, it really allows us to build up deep liquidity in the big trading pairs that people may be looking at. I think that's, and then finally, things like balancing out our open interest and finding new mechanisms to help ensure that the exposure that liquidity providers are taking is closer to their expected exposure. So it's kind of a big sum of saying we kept looking at the things that we thought we could do better, put them all together, and then out came V2.
Awesome. I know we also have Jonesy that just popped on as well. If you want to provide an intro and sort of like your role as well at GMX.
Yeah, thanks, Luigi. I'll just do a very quick intro then. Jonesy, communications contributor for GMX, been involved for the last year plus. I'm really happy to take part in spaces like these to discuss the nuances of the new V2 model and how it contrasts and improves upon the old GLP model that a lot of people are well acquainted with. So I'll leave my my very interesting but long backstory aside for now, and let's just dive into the V2 details that everybody's eager to hear more about.
So I guess like one of the main points that people bring up whenever they look into V2 versus V1 is usually like, the fragmented liquidity versus the GLP model. How do you guys like think about this component of it in terms of having multiple pairs that are segregated, and how does and how do you like bring all that liquidity together? I know there's other protocols out there built on top of GMX like MUX that aggregate liquidity, but I'd be just kind of curious from your standpoint how you view that.
Well, the way we're looking at this is a few different ways. Even if you were to look at GLP, there was while we supported multiple assets, there was a sort of siloing effect because of the amount of risk limits that we would apply on each individual asset. So just because the pool had, let's say 100 million in it, didn't mean that you could be longing any specific asset for 100 million or 50 million or even any specific number of that. It typically related to some ratio or relation to the assets that were individually accumulated in the pool. So in that fashion, being able to take something like GLP, break it out into the individual pairs, while notionally it definitely has a reduction in capital efficiency compared to a multi-asset model, from a practical standpoint, compared to V1, it probably has very little effect. But it also means that now that we've been able to pull these apart, we're actually able to look at each of these markets distinctly and look at what might be the way that you approach configuring these markets. So as an example, now that we have what I would call synthetic markets, which are markets, for example, let's say on Avalanche, we have a synthetic market for Doge. That's a market that's backed by by AVAX and by USDC, but you are able to now trade an asset like Doge. That's a very distinct trading experience, one that we definitely would not have supported in GLP because, again, not all liquidity providers would have been comfortable taking that exposure. But that is something that you now have an option of doing on V2. So I think that's an interesting aspect. As we start looking at other assets that go outside of crypto, we may be able to look at models with significantly more or less leverage, ability to maintain open interest at a certain fraction of the collateral backing, for example, as we're doing with some of the current crypto assets, or multiples of even the collateral backing if we were starting to look at markets that don't have that same level of volatility. Let's use Forex as an example. So I think that this new design really will allow us to fine tune each market, and I think that sort of added granularity we see as being a really it's a trade off compared to the simplicity of GLP, which was built kind of as a one size fits all, which we're now better able to address. I do think though that you are going to see an influx of different protocols building wrappers collecting either similar liquidity type profile pools, all pools, flagship token pools. I think you're going to see different baskets develop, sort of almost akin to people having a range of different ETFs or different funds that people have where they have different risk exposures. So I think we're going to definitely see a lot of that develop out, and from a GMX standpoint, we're hopeful that we can actually drive any incentivization that we do, a lot of it towards those sort of opportunities where other protocols are building. They're adding in risk management, rebalancing, yield optimization, whatever might be their sort of secret sauce as they look at the GM tokens as an underlying asset and create their own products. So we're hopeful that we can work with all these partners to build a new generation of innovative products on top of GMX V2.
Yeah, I think that was well put and helpful. I just wanted to touch on one point that you made about the Doge, because I think a lot of people get confused on this. How exactly behind the scenes is it leveraging the Avalanche liquidity for that Doge market? I think that I've gotten that question from a lot of users. I think it'd be helpful to kind of explain that mechanism.
Yeah, absolutely. So, I mean, the easiest way to look at it is, and mind you, these are definitely not by any means perfectly correlated, but it was taking a look at a strong crypto asset like AVOX that has a high degree of correlation with other volatile assets, and using that as a backing token, so that as a pool, there's at least some degree of backing compared to only holding a stable coin. When allowing people to make both long and short these various assets that may not be the same as, and are definitely not pegged to that underlying asset. Obviously, that does mean that you need to build in protection. So similar to the way that, let's say, lending markets with CDPs have an over-collateralization, we have the same thing, that we limit trading volume and trading size in these markets to a certain fraction of the overall liquidity that's provided to again help minimize edge risk exposure. We have mechanisms built into the contracts to deal with auto deleveraging at the edges, so that if we reach a point where large moves that are not correlated to the tokens that back these pools exist, is to sort of ease the markets back into shape. And I think the biggest one is that we've spent a lot of time both taking the concepts that we all are very familiar with in terms of perp markets on centralized exchanges. And while the construction is different, the effect is very similar, that using the mechanisms around funding fees, we've definitely created a structure where we see a lot of incentive to help bring these markets back into alignment. And for us, alignment isn't a 50-50 perfect balance. It's somewhere in that general vicinity. And the whole idea is that liquidity providers are very well compensated with swap volume, are taking a bit of volatility in terms of their asset and their asset exposure and their open interest exposure, but providing external support now through funding fees. Through funding fees and through even positive price impact for traders who have taken significant one-side positions in one side, and we help to sort of have traders balance that back out. And we've had really good discussions with a lot of let's say both private smaller crypto players and even larger institutional players, very interested in sort of getting in and being able to take advantage of trading those opportunities. They're just all waiting for, obviously, for markets like these to scale up to the correct level. And I think one thing I will just say that it's always a struggle as when you build these protocols. How do you balance the needs of traders, liquidity providers, or hedgers, anybody else who's in the system? And we've just tried to make sure that we keep our focus on safety, security, reliability, especially given that it's a new set of contracts, and making sure that the risk profile for liquidity providers is such that it's an attractive setup to bring enough liquidity to actually scale these markets to the size that, again, allows this trading activity to move on chain, which is really what our primary goal is.
Awesome. People understand sort of what the actual trade-offs are as an LP and a trader, in V2. I'm excited, like one thing I could talk about, and I think we've talked about in the past, is really about the flexibility of the model. I have asked you maybe, I don't know, 1 million times in the past about adding new assets to GLP, and you guys were, I think, correctly, thoughtful about, sort of that asset and the composition of that basket, especially given that you had V2 coming live. So what I'm excited about is more the flexibility that V2 provides as new assets are created, like EuroC on Avalanche, for example. It would be really good to, be able to quickly spin up markets when those assets are getting a lot of activity and start to capture that volume at the right times. What is the process to creating new markets? How do you guys think about that? What are the requirements? And is that a place that you want to play in terms of like being able to pick up new markets as they're like starting to gain traction?
Well, I think as of right now, deployment of new markets has been slightly gated, and it's been gated by the DAO effectively deciding which sort of additional pools it wants to add to the system. Now, there's no actual cross risk between pools, so there's actually no restriction on more pools opening up as long as there's liquidity providers who want to be active in it. But at the same time, we do want to be very, as you said, I think one of the things our community also tries to do is be thoughtful about when you add things, how how well do those assets or those markets perform given what's available. And you do need certain infrastructure. You need infrastructure in the sense that you need high quality oracles. So these new low latency oracles that we've spent the last year working with Chainlink to develop out very much support this mission, because they have just so much more granular information available that the contracts can ingest, and allows us to sort of leverage that off-chain, or actually the mixture of off and on-chain information, but in a way that we are able to better manage risk for liquidity providers when creating these markets. So oracles is one piece. Having liquid markets is another. Theoretically, can we operate in relatively illiquid markets? Yes, but the challenge is that if they are so illiquid that any reasonable price impact structure just effectively makes those markets unviable to really trade at any material levels of leverage, it's probably not an ideal scenario, and it's probably not attractive to liquidity providers. So to a great extent, once we get to that stage, that hopefully, permissionless creation of pools will happen, and the DAO doesn't need to further gatekeep, and we can find ways to both make it easy for people to understand how to, pick an oracle feed, take that and deploy one of these markets, I think it'll happen. It's just the thought right now is to go step by step. I do think that what's going to be interesting, though, is as we talk about an Oracle-based system, and we get more and more comfortable that the system can handle these new synthetic markets, is to look at assets. Well, as you mentioned EuroC, but any basket of potential currencies being tradable on the platform, commodities, any assets that have big, deep, liquid trading markets off chain and that can be brought on chain, where market makers and others who might have the opportunity to hedge off chain may also come in, pick up counterbalancing positions, take advantage of effectively that not just price discovery that we're achieving from off chain, but even the hedging cost. And we think that in time what that starts to do is create markets on chain that will be more and more and more efficient. For the trading of extremely large assets. And again, that's obviously a transition till the point that you get, those assets natively through order books and everything else trading on chain. But we don't see that being something that happens, soon, at least from our perspective.
So no permissionless markets in the short term, but potentially that could be something that happens down the road.
Absolutely. I mean, I think once we get to the point that we really fully have Chainlink up running in all of these in these environments in a strong fashion, we move away from, like, for example, right now we continue to have a kind of a reference design front end that's used by most people, but we're really working to have multiple front ends operating. We're really aiming to open out every aspect of the protocol so that other than the core smart contracts, the DAO doesn't need to be engaged in any other risk management. But it'll take time.
Got it. Yeah, that makes perfect sense. It's always good to also stress test the application a little bit before, I guess, sort of opening up the floodgates. I think from what a lot of people have seen, especially with the perpetuals market, I think bringing like exogenous assets into something like GMX V2 is where I think it gets really interesting. I could think about in 2020, it would have been really cool to have lumber perps. It would have been really cool to have different types of metals perps. Like there's just a lot of commodities out there that I think people don't understand how volatile they actually are. I think lumber went from like 250 to like 1600 back to 250. Pretty big move. And it would be really cool, I think, for people in the real world to have access to hedge certain commodity risk out there, but also sort of have the ability to speculate on it as well. So hopefully that once we get those types of assets, we can, and gold's obviously another good example. We can start to bring more non-native crypto users on chain, and make them come for the experience, which would obviously be new in this space. So I think that's something I'm really excited about. We're pushing pretty hard on bringing those types of assets on Avalanche, especially on the FX side. We're very focused on on bringing all non-US stable coins on Avalanche and, allowing folks to onboard, offboard into crypto, allowing for FX markets to take place. I think this is really just a perfect use case for this technology. People keep asking for use cases. Some of them are just like staring everybody in front of their eyes, and it's really a matter of just finding the right provider that can bring it on chain. Is that something you guys spent any time thinking about? Or, I know you guys have been so wrapped up in the actual deployment of, and sort of like getting GMX V2 live, but how are you? Do you think about the different asset composition that we can bring on?
Well, so Forex, which you mentioned, and is one that definitely always comes up. And just to be clear, we we're one piece of a puzzle. And as you said, if you take an ecosystem like yours, it's about getting protocols who can actually issue these stable coins, be the effective on and off ramps for those currencies into these environments. What we do is help to obviously create these liquid markets, and while a lot of our conversation right now has been about the leverage perp trading, in reality, one of the other great aspects of V2 is that with the new Oracle design and how we've integrated it into our V2, we can be effectively middle of the market, deep liquidity for swapping of any of these quotable assets. And I think that's something that's extremely powerful. If we have stable coins that we know are fully backed and that people are comfortable swapping in and out strictly on the basis of an Oracle price for those assets, it's very efficient to create markets on V2, markets that don't require external arbitrage to bring them into balance specifically, but which, because we can avoid sort of effectively sandwiching or front running, or specifically Oracle front running with the new setup, because effectively you submit your order, and if you think about it, it's kind of not that dissimilar to what might happen on if you thought of how you buy a stock or something on Robinhood. It's you put in your order, and that order is taken in and it is effectively matched, and then you're executed. And for us, it's that you submit your order, a keeper grabs that order, pulls the Oracle price, and just simply executes you, unless you've put a parameter saying you don't want to be executed under certain circumstances, at exactly that market price. And I think FX is a perfect execution case for this. And we're pretty excited that as a basket of Forex assets grows on Avalanche, that we can be an active participant in creating both perp markets and supporting liquid swap markets with high efficiency for them. And again, I think this is one of those great use cases where there is going to be continued use cases for those assets in terms of anybody who's even doing payment processing and everything else. It's not about speculation. There's an underlying need for liquid efficient markets to move around these tokens, and I think that's something that we're excited to play in. And that's been one of those great things that the Avalanche ecosystem, Ava Labs, has been focused on this, I know, for quite some time. And I suspect that if we're doing Forex markets, Avalanche is the type of ecosystem we're going to focus those efforts on, right? And there's other ecosystems where maybe there'll be other types of assets they want to focus on, and that's where you focus on. So for us, we just want to make sure we help create this infrastructure that can support these markets.
Yeah, and Jonesy, feel free to chime in, whenever you feel like it makes sense. But I think that's well put. Like certain ecosystems have certain things they're focused on, and others totally are just moving in a different direction. So for you guys, it's like makes a lot of sense to be this core infrastructure, allowing for swaps and perps, and sort of allow and reap the benefits of some of the ecosystems work as well, which I'm excited to sort of see take place. Are there any different integrations you guys are working on Avalanche with V2? I know there, a lot of people built on V1. How are you guys thinking through that process, and also, integrations for V2 markets once the product is in, a state that you feel very comfortable with?
So I think our starting list is actually everybody who is built on top of V1. We've already started engaging in those conversations with the V2 beta going live. We are still working through our Chainlink integration, which I don't want to give it a specific date for, but I want to say weeks, not months from now. That'll be live, so it's kind of feels around the corner. So I mean, for us, if I take partners like Yield Yak or Delta Prime or More Money, and we're definitely looking at where those opportunities are. I think that we see a lot of interesting opportunities to, again, make sure that the GM tokens are an interesting yield source. and go from there. And one of the other things is that we spend a lot of time in the construction of the risk around these new GM tokens to really make sure that they are hopefully after a short period of proving out in the market, that you will see them much more deeply integrated in the ecosystem as a source of collateral. They've been sort of built as ERC-based tokens, auto compounding their yields in real time into the token, so that it's effectively a value accruing vault token. Makes it really easy for it to be a plug and play asset now in the ecosystem, which, we appreciate every partner who took the time to integrate V1, especially given how difficult a process we probably made it with our design, but it was just a factor of how we needed to build V1. But with V2 being built with this idea of all of these builders building out and us being able to support that, we've tried to keep that in mind. I think that's those are the area. Those are some of the areas. A lot of the ecosystem is probably also familiar. We have we were really lucky to get a set of rush incentives set in place, most of which has been set to really drive V2 adoption, because we see it being a really powerful tool in the ecosystem, and so we're looking forward to having those discussions with everybody who we're working with.
Yeah, I think that's a good point. The rush incentives were announced a while ago now, and some have been deployed, especially with like the yield integration in particular. I think it'll be, I do think like it's nice that we were both thoughtful and on the same page in terms of setting a lot of that aside for V2, because I think now that this product's so much more flexible, there's a lot more we could do to bring traders to Avalanche in particular, and work with them to use this product. So, I think there's a lot of brainstorming to do on that standpoint. And go ahead. I hear you. I hear you chomping.
No, I am chopping because the other thing I was going to mention is that one of the things that we also really wanted to make sure was that, which we knew V1 had some limits on, was also how do we take an asset like AVAX and create great markets for that. And so I think one of the other really exciting things is going to be that there's a lot more AVAX backing markets in V2 on deployed on Avalanche, and I think that's another piece of this puzzle that I'm hopeful that when people get to play around with, I think we're going to hopefully do a pretty good job helping to deepen the liquidity for AVAX itself on chain. And that's not an integration, but it's just something I forgot that I wanted to really make sure I mentioned.
Yeah, I think that's going to be a key part of how we deploy those and sort of have it be mutually beneficial, which is why it's been so great to work with you guys so far. I've been peppering you, like you've been interrogated here. Do you have any questions in particular for me, or with respect to the Avalanche community, or anything that you think would be interesting to discuss for everybody else? I just don't want to give you an opportunity as well to kind of not have to deal with me peppering you.
No, well, listen, it's not even necessarily specific to V2, although I'm sure there's potential for overlap here. I mean, it'd be great to understand how, as you've been talking about bringing, various Forex tokens into the chain. I know even looking at things in terms of real world assets, and it always leads to a bit of a natural extension, which is, onboarding and bringing institutional players into the ecosystem, either into the fully public or the permission chain environments. I mean, it'd be great just to see how you see a lot of the DeFi protocols that are out there today. Could be things like GMX, could be things like Trader Joe, and how you think they plug into that sort of future for as sort of these new capital sources and very different capital sources come on chain in some fashion.
Yeah, great question. I think since the beginning, Avalanche and Avalanche has been acutely focused on institutional, adoption, institutional, the integration of sort of institutional TradFi and DeFi. We've announced many things in the past, such as the KKR initiative, the Spruce initiative, which brought names like Wisdom Tree, T Row, and Wellington on chain on a subnet to actually test out DeFi protocols, of which very much hope that they could test out GMX v2 at some point. Because the way we kind of think of it is, I have this sort of, I guess, vision in my head of how this all plays out. And it's really like this. I think there's two paths forward as it relates to DeFi and institutional finance. One path is the DeFi path, and that is the open, permissionless, public infrastructure, public good that should be available to anybody in the world. As long as you have internet connection, you now also have, like the internet, the ability to transact freely across borders. That should exist, will exist, and is incredibly important for us to continue to pursue across the globe. That's the one path I see continuing, and I'm very excited about. There's another path that I see also from this technology, and that is what a lot of people refer to as institutional finance. We call it on-chain finance. It's not decentralized, to be very clear. Like, that's why we don't call it DeFi. And what this is really upgrading financial market infrastructure with the new technology here. A shared ledger is a really good way for finance to actually work. If you would have told people that in 2008, they wouldn't have went and made clearinghouses mandatory for swaps. They also, if you really think about it, like, the innovation that DeFi brings is really quite simple. It's the ability to atomically transact without an intermediary. Like, fascinating innovation. Like, not possible in TradFi, that relies on intermediaries for every transaction and is not atomic. So bringing that atomic transaction without an intermediary to TradFi is the second path that we very much are focused on. And the intersection of these two is where I think the deep liquidity comes. People talk about, like, oh, they got 10 million TVL, 20 million TVL, oh my God, like all this stuff. Like, these are, valuable and very good at testing protocols, testing exploits, testing that these things work. But ultimately, these are small numbers when it pales to something that institutional funds can bring. The other thing is, when institutional funds come, they have the sophistication from a finance perspective to actually put these products to the test. And that's something that, from the DeFi side, we still need. We still need people who have been working in finance for 30 years, 20 years, whatever. Just as they eat, breathe this stuff all day, to bang on these products and really be able to sort of collectively make us build something better. So that's kind of how I see it playing out, and that's why we're so focused on institutions. And so, I do think, like, as a DeFi ecosystem, part of our value add is being able to sort of bridge the gap for certain DeFi applications that have aspirations that are a little larger than solely the public good route, but really want to play both lanes.
No, absolutely. And I mean, I'll just share that I was at ETHCC this year, and in a lot of conversations with people with very large organizations, there really was an appreciation of the fact that, as you said, what we're building today is not something that they're going to interact with today. But you're right. They were already seeing the products that they effectively had and that they were using in-house, that they were operating, in a closed fashion, being created and potentially, over time becoming available to them in a different fashion. And you're right; they may well only be able to do so in, let's call it, a trusted environment, as opposed to a completely decentralized environment. But the chance to have those same efficiencies brought to the assets that they deal with and scale, I mean, that for them is a game changer, and it is also the reason that they are obviously all watching. And what's the best way to frame this? There will be a moment, and it's simply a matter of continuing to build and be prepared for it.
That's right. I think I'm conscious of time. So Kyle, I just wanted to, while we continue to chat here, to, offer up if anybody has any questions that they can come up and, ask to us. In particular, they're, between Coinflip and myself, I think, we probably have met many of the DeFi applications on many chains out there. So happy to field any types of questions, but really want to focus in particular on GMX, especially V2. I think, it's a call to the Avalanche community to try this product out from my perspective. I think I've used it. I think it's great. I think it's exactly sort of like the right direction in terms of the flexibility of what people need and the ability to add assets going forward. So would love to see people, playing around with LPing, trying to understand how to trade. One thing I would say is like on the UI, when you do go trade on the top right, there's a V1 to V2. It took me like forever to figure that out. So you may want to just, you have to click V2 if you want to access liquidity for V2 on the trade side. So keep that in mind, because a lot of what I've heard from people when it comes to GMX is like, oh, I need more AVAX liquidity. Well, make sure you check both versions now if you are looking to trade. And also a little UX comment there for you, Coinflip.
That's good feedback, and it will be shared.
Cool. So Kyle,
it's being worked on.
I figured. Let's see if anybody wants to come up. In the meantime, while we wait for one of the brave soldiers out there, I guess like the last question I wanted to ask you was a little more broad and a little bit more macro. Given your, you sit in an interesting spot across all ecosystems. We're seeing stablecoins being drained throughout DeFi, as TradFi yields have climbed. It's made less sense to actually take the risk of LPing in DeFi for many folks out there. I'd be kind of curious to hear your sort of like state of the state of DeFi as a whole, and how you think like it, how you think it can sort of start to grow again, and where those green shoots start to happen after this sort of long, I think, decline that's happened since, I guess, since 2 years ago or so, a year and a half ago or so.
Oh boy!
Tell us what's going to happen, Coinflip, please.
Well, no. So I will say, I will say that there's always a spark, right? And that spark is when there is something that you can do or that you couldn't do elsewhere, and now you can do in crypto. And so, as an example, if I go all the way back to 17 and 18, in many cases, the ICO was the use case, right? A crowd-funded way for people to easily be able to, enter new opportunities at a very, very early stage. 2020 was really the fact that some of those projects that started then and some other ones after became, DeFi started coming into play, and it started showing that there was a real product. I think if you go into 21, it was actually, late 2021, it was actually NFTs that, sort of, again, helped to show that there was something interesting, and especially as the whole world was sort of closer to indoors, and we sort of were rediscovering this idea that luxury items could actually be digital items, right? And again, it started to show the pieces. So I'm not sure what that further trigger is. I mean, obviously, being the area that we all work in, I definitely do think that efficient markets, basically being able to maybe in time even have things that would otherwise have not been able to be accessed by people within financial markets now being easily accessible within DeFi markets could be interesting. And again, these might be things that we think about in the Western world as being readily available, but actually the moment you step away from those markets, they're entirely inaccessible. And so that might be definitely, I think, an area that comes into play. I do, though, the point that you specifically made about interest rates, that's one that is a really interesting question, because, as you said, volume has come down and activity has come down, which if you take that as a proxy of value created in the ecosystem through utility, at the same time that the risk-free rate for capital has been going up. It definitely provides a very natural contraction point. So I guess one of the things that we're definitely going to have to look at is how do we make sure that the capital that's in the system is working better, working harder, hopefully well protected while doing so, to make sure that everything is primed to be able to operate at this level, and hopefully as and when more capital gets added to the system, it's very easily absorbed and very efficiently, just keeps scaling. So maybe that's what we need. We just have to keep building to be prepared for it to scale when it happens.
Awesome. Well, I'm not sure anybody was brave enough to come up, unless they were.
Not right now. But
Okay.
if you have anything else you want to discuss, I have a few minutes. But if anybody wants to come up, request to be a speaker with the mic button in the bottom left. Oh, it looks like we got one here. Hold on. So, MEV, you're up.
Hey, thank you so much, guys. I appreciate it. Coinflip, it's great to hear, that the Chainlink oracles, the low latency oracles should be coming sooner than later. I did have a question on the development side. How many developers are actively working on the GMX protocol?
Okay, so I think the only number that I will sort of give is, and this is not just developers, this is actually a little wider, but effectively you're looking at under a dozen people altogether who are working on the protocol between the smart contracts, the front end, ecosystem build out, all these areas. So it's actually, we maintain a pretty small footprint. But if you really want to get deeper into that question, I'd say go check out the GitHub. You can see where all the commits come from, and I think it'll give you an even better sense of who's been working on these contracts.
Thank you for that. And I think the reason I'm asking that is, do you think from your perspective, or even Jonesy, I see Tano over here and a lot of the people from the Telegram group and the Discord, and I appreciate you guys. Do you think that the team would benefit from a bigger team size when the protocol has so many things that it wants to accomplish? Is that something that do you think would benefit the protocol? Is that something you guys are thinking about as a team?
Yeah, so I'll put it this way. We would never want growth to be constrained by not having the resources that are required. But at the same time, I think one thing that we've sort of tried to stay focused on is making sure that not only do we leverage having standing contributors within the DAO, but I think for us, what we've done in terms of building out an ecosystem of builders who work with us has been a much bigger focus, because I think there's a lot more that you can leverage in terms of both them working on building out products that improve. They may be their own standalone products, but they strengthen GMX. They build a moat around GMX in terms of what it's doing in the space. They bring their communities into the GMX and what we're doing as well. And I think so for us, we're going to be looking at focusing resources on how do we instead drive that aspect of growth. And to use an example, we're going to be trying to set aside some funds to assist in audit costs for smaller protocols who want to build something on GMX. We are working with auditors, risk managers, everybody else to get preferential rates so that they do have the access to the best possible resources and leverage sort of the relationships that we've built to help drive that. But with all of that, we're absolutely going to be looking at additional resources. Definitely, we want to make sure that the most experienced developers or contributors who are developers can be focused on building out products, and then also hopefully reinforce it with people who can help to help the DAO sort of manage the deployments and the like on a more daily, weekly basis.
Thank you for answering. And do you mind if I ask one more question? Sorry, I don't want to hog up all the space.
Yeah, I'm adding
Please.
one more person up. So go for it, and then we'll take one question after that.
Sure thing. The only thing I really wanted to ask is for I guess the GMX team. We've seen how the space has gotten so much more competitive over the past probably the past year, really, since GMX first came out. Since we really saw a lot of the TVL come through on both Avalanche and both Arbitrum. How do you guys manage expectations when you're looking at other projects? Does that impact you as a team? I'm just kind of curious to see what your thought process is.
Oh boy. Okay. So I say this, and I say this not with not in a boastful or other way. We probably don't spend as much time as people probably think we should or do, probably looking at what everybody else is doing. We definitely look to understand where we see the ecosystem going in terms of approach. We definitely look at making sure that we try to understand what traders, liquidity providers, everybody requires. But taking something like V2, which was built from the ground up. It's not like we went and built a GLP version 1.1 or 1.5 or a GLP version 2 even. It was building an entirely new architecture, looking at a whole new set of challenges, again, with an eye to the future of how do you deal with this as liquidity continues to scale. So I think we're obviously very, we obviously have, I can't say we, however we want to put it. I think there's a lot of faith that there's a very interesting product there in V2. We think it addresses a lot of things that we're not able to be part of GLP, and starts adding in a whole new set of potential use cases. And I think, again, creating these reliable markets, efficient markets that are available. So. But at the same time, I think one of the, it's kind of like going back to your last question. One of the biggest strengths that GMX has had over these last 2 years has been this active community that has really supported it. Those people have both been traders, they've been liquidity providers, they've both been, advocates for the protocol. The builders who have done so have done exactly the same roles, helping us either build trading volume or build liquidity, or again, visibility through our referrals. I think we just want to keep trying to leverage that, because we're never going to have the marketing team of a large sex or an engineering team of a large sex or do that. But what we have collectively, puts together and creates the same thing. But without, but sort of, so it really is decentralized even from delivering the protocol.
Appreciate you taking the time to respond.
Yeah, thanks for the great questions, and appreciate you coming in and supporting the spaces today. So let's kick it over to David. You are up
Hey
next.
guys, thanks. So proud Berry owner. Question one, what's going to happen with the Berry liquidity? Are you guys planning to move it over? Because I saw there's a few berries in here. And then also, big thing is GMX. What is GMX's involvement? Is mostly the new V2 structure geared towards just the GM itself and the fees going to GM, or does GMX, the token, actually derive any benefit from the V2? Are we supposed to move GMX over? Just kind of curious as to what happens with the current ecosystem. Is that going to be phased out? And just kind of where are we going with the GMX, and what are the berries doing with their liquidity and whatnot?
You want me to take this one, Coin? Then I can chime
please.
in a little bit as well. I can imagine you're losing your breath at times. Thanks, David, for your question. I think the important thing to start off with is that V2 really exists alongside V1, and the GM pools are really complementary to GLP. And that will remain the case for the foreseeable future. Those additional markets are now just available. And for the rest, when it comes to liquidity provision, we have somewhere between 500 and 600 million in GLP across our 2 deployments. And that will probably be there for a while. It may slowly move over to some of the GM pools as more and more participants start to realize what the opportunities are there, how the yields function there. We do expect some of that liquidity to slowly migrate to the V2 pools. But this is really something for the market to decide. And I expect that process to be slow. And as there is such significantly deep liquidity currently in GLP, I expect that will also remain the case for the foreseeable future. So GLP will still facilitate all the trades on GMX V1, still offer the same zero price impact. So will still be very attractive for larger traders. et cetera, et cetera. And particularly as volatility returns to the market, I'm sure that we will see quite a lot of activity on the V1 pools as well. Your other, I think the other element of your question was related to the GMX staking. There's a slight change in terms of how a protocol revenue is distributed to all the different stakeholders. There's been a governance proposal that was accepted a few months ago to update the fee distribution. Just to recap, the existing situation was that GLP received 70% of all the protocol fees on its own chain, whereas GMX stakers would receive 30% of the revenue from all chain deployments. As of a few months ago, and with the new launch of V2, there is now a small allocation of the protocol fees that goes towards the treasury. GMX has been quite a lean protocol, and as Coinflip already alluded to, it doesn't have a huge team. Just a relatively tiny group of hardcore contributors and an ecosystem around it of other very supportive teams of builders. So now we're allocating 10% of protocol fees to a treasury, which will fund ongoing development for the long term, fund the Chainlink low latency oracles, fund devs, fund other important initiatives as we build our relationships and keep improving this on-chain trading experience. And that 10% breaks down to be specific in GLP going from 70% of protocol fees to around 67%, and GMX stakers going from there 30% to around 27%. So both take a tiny haircut, and those protocol fees accrue to the treasury, just so that proper development can be funded for the long term. And in the coming years, there is an official treasury on chain for GMX to continue building out all its functionality.
That's awesome. So does the GMX token actually benefit from the V2 as well?
Absolutely, yeah. No, the fees from V2 accrue to GMX stakers just as much. There's no reason to migrate. There's no reason to unstake. In that sense, you don't have to do anything to profit from the additional activity that the V2 pools and markets generate.
Hey, and what's the update on the berries?
GMX
Berries keeping their liquidity over in the GLP, or are they going to be moving over?
I'm not sure, but I will check. I think I haven't actually recently double checked what their plan is with their POL. I mean, our recommendation is that everybody should still reflect that V2 is a new protocol. Please, I wouldn't tell anybody that what to do, but some people are definitely moving part of their liquidity. Some are moving all of their liquidity. Some are simply waiting.
Or why not just add more liquidity,
that's
right? I said,
Sorry?
or why not just add more liquidity, right? To keep both in and to keep it in both.
Well, yeah, well, that's true. So but what I was just going to say is that to add on to what Jonesy was saying, GMX stakers receive the benefit of all things built within the GMX ecosystem. So V1, V2, and any of the other products. That's always been a universal focus. We do believe that value accrual is a healthy aspect to this, and now in the process of building up a treasury. And then hopefully over time, that treasury that gets built up also is able to self-sustainably maintain future growth, development, and the DAO being able to direct its resources for more growth is important. So again, we're trying to take all the right baby steps. Steps that, by the way, we probably would not have thought we would have been able to do this early, but we've been blessed with progress that's allowing us to sort of help start down that.
Thanks. You guys have been awesome in the space. You guys have really been awesome in the space from what I've seen.
Appreciate it. Appreciate the questions. I just want to be conscious of Coinflip's time. I know I have a hard stop a minute ago as well. So I think at this point we could wrap here. And if there are any questions in particular, my DMs are open. I believe Coinflip's are. If they're not, there's a million ways to get to this guy. So I think it's a good time to wrap. And just want to thank you guys for coming up and having this conversation. We're really pumped about GMX V2 on Avalanche, and hopefully we get more questions on Twitter and everything like that, and we can answer them.
Yeah, don't hesitate to jump into Telegram or contact me or Coinflip on Twitter or via PM. We're always open to questions and happy to answer any. I still see one. Oh, that's Imi who raises his hand. So if he still wants to address us, please feel free, Imi.
Sorry, guys, I did forget to ask one thing. From the Avalanche perspective, curious to see how you believe you're going to be able to support GMX going forward. Has there been any discussion of perhaps a trading competition? I remember that was something that was done when Avalanche first had GMX out there. Just kind of curious to see if there's any synergies that are occurring in that aspect.
Yeah, good question. I would just say, like, the GMX rush that was announced months ago, I would say the majority of that has not been used yet, and with the eyes towards GMX v2. So I do think there'll be plenty of ways to leverage that and sort of build liquidity and build excitement for GMX v2 on Avalanche. So very much looking forward to working through those plans with the GMX team and whatever different means that might take. So yeah. With that, I want to just thank everybody. Coinflip, if you have any last words you want to say, and everybody can have a great day.
No, thank you, GM, GN, to everybody wherever they are, and that's it.
Awesome. Great stuff, everybody. Thank you.
Awesome.
Yeah, thanks for tuning in, everyone. And don't forget to place a trade on the V2 side on Avalanche. We have some Solana, XRP, Litecoin, and Doge markets available. So go experiment and dabble with them, provide some liquidity, and provide us with your feedback, because we love to hear how people have, what their experience is and where they think things can still be improved. So don't hesitate to get in touch with us.
By the way, sorry, I'll give just 10 seconds. When you go to V2 and you check it out, it's actually it's pretty clear what the sentiment is. The Sol markets are absolutely shorted to hell, and the AVAX markets are long all the way.
Oops. Appreciate you guys coming through and all the great insight, great questions from our guests here, Luigi. Appreciate you as always. Share this recording so people can come back and listen to it, and we'll catch you all next time. Thanks, everybody.
Thanks for tuning in, everyone.
Thanks, guys.
Have a great day.
Bye-bye.